Welcome to the Thursday edition of Tech Stocks Daily, where we're diving into today's riveting tech market drama. First up, Snowflake has everyone buzzing with a 34% stock surge thanks to some knockout Q3 results. Think of it as a wintry blockbuster you won't want to miss. Plus, Google's got more on its plate than search queries, as it faces a DOJ showdown over Chrome's potential spin-off. Meanwhile, Kyndryl's brewing strong positive vibes with a massive $300 million stock buyback, and MongoDB's shares are climbing faster than a caffeinated coder, thanks to a newly minted partnership with Microsoft. Stick around as we unpack these stories and reveal why today's tech tales are raising eyebrows in stocks. Let's get going. Hey there, tech wizards and stock market sleuths. Today's headliner is none other than Snowflake, and it's not about catching snowflakes on your tongue. We're talking about the data warehousing company that just made Wall Street do a double take. That's right. Shares of Snowflake went into full liftoff mode, climbing an impressive 34%. So what caused this icy surge of excitement? Buckle up, because I've got the scoop. Snowflake reported its fiscal Q3 2025 results, and let me just say, they didn't just glide through, they carved out a snowman masterpiece. Investors were particularly jazzed up by some key performance indicators that came out of the freezer piping hot. First off, Snowflake's total product revenue ticked in at $900 million, topping management's highest estimates of $855 million. We're talking numbers that'd make any bean counter blush, but the sunshine on their winter wonderland was more than just those juicy figures. It was the shimmering customer wins. Snowflake scored some hefty longer-term contracts, sending its remaining performance obligations skyrocketing by 10% to reach $5.7 billion. To add some context, the growth between Q2 and Q3 fiscal 2024 was only 4%, so this jump was more like a leap across an iceberg. With these blockbusting numbers, Snowflake's management decided not to play it cool. They upped their fiscal forecast, now expecting annual product revenue growth to hit 29%, up from the previously estimated 26%. No chill there, folks. They're cruising down the slopes with fanfare. This snowball effect didn't just stop at Snowflake. Other data and software players like MongoDB and Datadog grabbed their toboggans and joined the ride. Following Snowflake's stellar earnings report and optimistic guidance, their stocks also found themselves basking in a minibar of market optimism. MongoDB shares jumped 14.9% and Datadog climbed 7.27%. The data ecosystem seemed to resonate with Snowflake's narrative of a growing enterprise adoption, largely attributed to its savvy moves like acquiring Datavolo and teaming up with AI powerhouse Anthropic. So what's the magic here? Snowflake has positioned itself as more than just a company. It's become a veritable theme park of AI-powered data solutions, attracting any business that's leaning heavily into cloud-based AI. CEO Sridhar Ramaswamy summed it up nicely, crediting their commitment to making Snowflake the most user-friendly and cost-effective player in town. To wrap it up, if you've ever doubted how much heat cold hard data could bring, just look at Snowflake today. Granted, the broader data and cloud services sector got some love too, echoing a winter wonderland cheer for all. As enterprise clients shake off years of budgetary hibernation, Snowflake seems ready to write its own avalanche story, forming the data layers to support the advanced analytics and AI narratives that are unfolding across business landscapes. Now, let's chill till next time, or should I say, heat up the market discussions in the comments. All right, folks, buckle up because the tech giant just hit some legal turbulence and it's worth discussing. In today's tech news, Google found itself a little worse for wear after its parent company, Alphabet, saw a 4% slip in shares. Why, you ask? Well, the Department of Justice is throwing down the gauntlet, calling for some serious restructuring by ordering Google to divest its uber-popular web browser, Chrome. Yes, you heard right. The DOJ believes spinning off Chrome could finally put an end to Google's alleged stronghold on the online search market. So what's the big deal here? According to the DOJ, Google's integrated control over Chrome acts like a digital steel curtain, barricading rival search engines from entering the fray for users' hearts and search queries. They are, in essence, accusing Google of hogging the virtual pie, leaving crumbs for everyone else. These prosecutors are proposing that in order to level the playing field, Google needs to wave goodbye not only to Chrome, but also to any exclusive contracts that make it the default divine on devices from tech titans like Apple and Samsung. And if that's not enough, there's a whole batch of dramatic proposals on the table, including a possible divestiture of the Android operating system. No kidding, the DOJ is aiming at Google like it's the Wild West, jonesing to deputize them with a whole new set of rules. Google naturally isn't backing down without a fight. They've tagged these proposals as being extreme and a looming dark cloud over US consumers and businesses. Apparently, their current setup isn't just about world domination, it's also about providing the best user experience, or so they claim. The whole saga is set to heat up with a trial scheduled for April, though look out for potential plot twists with the changing winds of the political landscape. Just a side note, Aravind Srinivas, CEO of Perplexity AI, isn't hiding his interest. He's actually eyeing Chrome like it's the golden fleece, estimating a sky-high valuation of $20 billion if the courtroom drama leads to a sale. Who knew browsing the web could become such a high-stakes game? All this commotion is happening in the aftermath of an early August judicial gavel drop that confirmed Google was playing solo league in the search market. So what's set in motion is potentially a huge reshuffling of chairs in the tech parliament, something that could give smaller search engines a fighting chance. Google essentially finds itself in the hot seat, charged with maintaining an alleged de facto monopoly that has significant ramifications for competitors and the future landscape of digital technologies. The outcome of this legal roller coaster could be transformative, sending ripples across the tech industry. That's the juicy bit for today. Stay tuned for more tech tales as the drama unfolds. Ladies and gentlemen, grab your tech enthusiast hats and get ready for an exciting dive into today's wave-making news. Kyndryl Holdings is making headlines with quite the financial flex. The buzz is all about a jaw-dropping stock surge and a $300 million share buyback program. Kyndryl, an IT services company spun off from IBM not long ago, decided to throw a party for its stock with a generous buyback. Imagine the scene. The company, sipping metaphorical tea at its investor conference, casually announces it's tearing up the shopping list with plans to scoop up $300 million worth of its own jackets in the retail hangar that is Wall Street. Now, why does this matter, you ask? In the corporate universe, a buyback of this scale is a big thumbs up from Kyndryl's management to its investors. It screams, "We believe in our current and future value." By reducing the number of shares floating around on the market, each remaining share becomes a bit more precious. It's like decreasing the supply of ice cream in summer. Everyone loves it more. Kyndryl has been working on sprucing up its financials just like you'd upgrade your gaming PC setup. They're not just talking free cash flow, they're invoking the power gaming realm of $1 billion expected for fiscal 2028. That's right, Kyndryl's trajectory is about as linear as a Tron light cycle at the moment. A critical part of the excitement rests in Kyndryl's major operational transformation. CEO Martin Schroeter is playing live-action chess, strategically placing this buyback as a testament to their stronger margins and increased free cash flow. The goal? Turning on a profit fountain amidst formidable market competitors. Let's chat stock performance for a second, because Kyndryl isn't just using the troves of the forgotten stock buyback myth. Kyndryl's market performance has been buzzing louder than a bee in a baseball cap. Their 2023 stocks jumped a whopping 87%, with 2024 figures already climbing nearly 40%. Somebody serve this company a smoothie because they deserve it. Buzz is also about legitimate technical chakras aligning for this stock. Remember those exponential moving averages and MACD indicators from your college finance class? Well, Kyndryl is soaring above all those beautiful averages like a skateboarding meat pie. However, hold your horses. Kyndryl's RSI points to an overbought condition. That's basically the hooded fortune teller saying that our roller coaster could plummet soon. But while investors are reveling in bullish vibes today, it's a gentle reminder to double-check those seatbelts, because stocks can reverse faster than ninjas on skateboards. In essence, Kyndryl is loud and proud about its path forward, pulling off a headline-grabbing $300 million "We believe in this" buyback move. But, depending on how the market rides the RSI, they may aim to navigate new strategies forward on this thrilling roller coaster of corporate finance flair. If you're in for the joyride, just hold tight and keep watching those charts like a hawk. All right, tech enthusiasts, let's dive into why MongoDB has been making waves. Our favorite NoSQL database company, MongoDB, has been the talk of the NASDAQ town today, and for some pretty solid reasons. The stock caught fire, climbing by a substantial 11.95%. Now, there are a couple of pivotal events playing out in the tech ecosystem that might explain this surge, so let's unpack them. First off, there's a new bromance blooming between MongoDB and Microsoft. This week, these two tech giants deepened their partnership to offer customers enhanced access to MongoDB's range of products and features. It's kind of like upgrading from economy to first class. You get everything and some. By bolstering their ties, they're creating an even more enticing environment for current and potential customers. More collaboration usually means more innovation, and investors love when two tech titans dance the tango. But that's not all, folks. MongoDB's good vibes are likely influenced by what's happening with its competitor, Snowflake. Much like seeing your friend get a new job perks up your own career aspirations, Snowflake reported significant growth in its customer numbers and contracted revenue. Although MongoDB noted a bit of a slump recently due to shaky macroeconomic conditions, Snowflake's rosy results have invigorated investor confidence, not unlike getting a much-needed caffeine boost during a Monday morning meeting. If Snowflake is succeeding, investors are saying, hey, MongoDB might be next. Moreover, MongoDB is gearing up to announce its fiscal third quarter earnings on December 9th. Although MongoDB reported a 13% lift in revenue in its last quarter, what kind of overachiever has only 13%? They're guiding for at least 14% in the next round. And with all these new developments, who knows? They might surpass those growth expectations. Stay tuned, because nothing gets Wall Street more excited than beating the estimate. Now, here's an ace to watch for in MongoDB's upcoming report: their artificial intelligence products. AI has been all the rage, but MongoDB's adoption here has been cooler than expected. If this starts picking up, it could unleash another wave of optimism. And we all like a good optimism ride, don't we? So what do you think, viewers? Are you excited about MongoDB's future? Do you think their partnership with Microsoft is a game-changing move? And what about the AI front? Will MongoDB manage to turn those numbers around? Drop your thoughts in the comments below. Your insights might just be the caffeine shot our channel needs. All right, folks, let's dive into my 2 cents on one of today's spotlight stocks, Snowflake. It's the kind of stock that's not just sparkling in the snow, it's downright dazzling after that impressive surge we discussed earlier. Now, if you're asking whether I'd sell, buy, or hold, here's the snowball-sized opinion. Buy. Why? Because Snowflake's recent fiscal Q3 results aren't just hot air in a wintry breeze. They're strong indicators of a solid underlying business model. With its product revenues smashing expectations and those longer-term contractual wins bumping up remaining performance obligations by 10% to $5.7 billion, Snowflake's future runway looks extensive. Their management's confidence is evidently high, given they've upped their revenue growth expectations from 26% to 29%. Snowflake's ability to stick the landing when everyone else is slip-sliding is attractive, especially with their strategic acquisitions and partnerships. This heralds not just growth in numbers, but potentially faster, sharper, AI-driven capabilities that Snowflake can now capitalize on. Despite inevitable economic ebbs and flows, Snowflake's integration of AI into its platform and its enterprise uptake suggest it's not just skating by, it's leading the pack. Additionally, this snowball effect isn't in a vacuum. Seeing how other players like MongoDB also surged based on its stellar earnings, hinting at the rising tides of tech infusing enterprise adoption strategies. However, one golden rule always prevails. Do your own research, folks. Consider your investment horizons, risk tolerance, and the potential ebbs and flows. The market can be as unpredictable as your coffee staining just right on a winter's morning. But for now, based on today's shimmering news, Snowflake looks more like a solid buy than a hold or sell. What do you think? Ready to sled down that snowy hill with Snowflake? Or are you watching from the lodge with cocoa in hand? Let me know in the comments below. Today's market action was like watching a thrilling tech blockbuster with plot twists at every corner. Snowflake soared with a whopping 34% jump, dazzling investors with its Q3 performance and sending ripples of optimism through the data ecosystem. Meanwhile, Google is locked in a legal showdown with the DOJ, pushing boundaries and prompting imagination debates over defragmentation and user experience. Kyndryl flexed its financial might with a headline-grabbing stock buyback, and MongoDB played a high-pitched symphony with Microsoft, boosting its stock and setting tech enthusiasts abuzz with anticipation. Each story carried a mix of excitement and drama, showcasing why the tech industry continues to be engaging day in and day out. If today's thrilling encore left you wanting more, be sure to smash that like button, subscribe, and share the drama with your fellow tech enthusiasts. Make sure to circle back tomorrow where we'll unpack another batch of exciting tech tales. Let's keep this tech news train rolling together.